Hello everyone, good morning and welcome to the INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Friday the 5th of March. So what are we going to learn in today's video? Well, it is the key move that we've seen in markets from Jerome Powell again. Jerome Powell, the Federal Reserve Chairman, has come out with a fairly dovish speech. Markets are getting worried that this means the Fed is complacent on inflation potentially, and they're not willing to act as inflation goes higher. So what we've seen is some key moves in major markets. That has impacted on the dollar, especially the dollar strengthening on this move. And subsequently, equities are weakening, and we're going to see that in the charts that we look at today. We've also got the non-farm payrolls report to look out for. That's going to be important this afternoon, so volatility could be at play there, and we need to make sure that we consider that when looking at the charts. And finally, as ever, don't forget to look out for the INFINOX support resistance table of major markets at the end of this video. Okay, in terms of market insights, well, the key charts we're going to look at today, I'm going to have a little look at the dollar initially, but mainly focus on euro dollar, which has had a significant impact from the dollar strengthening, euro dollar moving lower. Also looking out for what the impact is continues to be on this gold chart. Dollar strengthening doesn't look good for gold normally, and that seems to be the way that that's playing out as well. And we're going to finally look at equities. The S&P 500 futures having a bit of a hit once more yesterday, big move to the downside and a key technical level broken. Okay, so let's have a look at those charts. Onto the INFINOX MT4 platform, and we're going to start with the quick look at the dollar now. We can see that the dollar has shot sharply higher. The move driven by, for those who look at these things, bond markets and bond yields moving sharply higher yesterday. The 10-year in the US certainly drove that US dollar higher, and it's now through a key level of resistance, the 91.60 to 91.70 band of resistance. It's now moving through that, and the implication of that, certainly with the strong momentum coming, but the implication of that means that euro dollar is now testing its equivalent, because euro dollar and dollar index sort of two equal and opposite charts pretty much. Euro dollar now breaking down below 119.50. That's a key level of support that euro dollar is breaking down. But also look at this uptrend channel on euro dollar. If I zoom out, you can see the uptrend channel on euro dollar that it's been in pretty much throughout last year is now being broken, and that breakdown below 1950 is a key reaction low being broken, and that now means that this is sort of turning into a topping pattern, falling over, turning corrective, and that does mean effectively that the euro dollar is going to be coming back into this next band of trading between 16 and 20. So that's a key move, and you can see with corrective momentum as well. So it would suggest that euro dollar is turning into a sell into strength chart, and certainly underneath that uptrend anyway. Onto the gold chart, we can see again another market that is being impacted negatively by the stronger dollar. Stronger dollar pulls gold lower, breaking down below that 1760 level. It looks as though gold is on the way to testing 1660 to 1670. The momentum is pretty negative at the moment. You would argue it's oversold though. I would say it's below 30, and it doesn't often get below 30 on the relative strength index, the RSI. So below 30 is stretched. You could imagine there could be some sort of a kickback higher, but certainly in recent months, any reaction higher tends to be sold into, doesn't it? And you'd say anything underneath that 1760 level of resistance within this downtrend channel now is a chance to sell. And anything back around 50 level on the RSI, 45 to 50, is a selling opportunity, I think, as the market unwinds into the next sell phase. And finally, onto the S&P 500. Well, it certainly looks as though that equities have broken down, certainly near term anyway. This long-term uptrend, let me show you how far back this goes. This long-term uptrend has been in place since February 2020. So a long uptrend has now been broken. The market has rolled over and broken that uptrend and is now looking to test this key next level of support between, well, basically around 36.57. Momentum indicators, RSI, the relative strength index, is now back into the area where the lows tend to be seen, sort of between 35 and 40 area. So you would suggest that maybe there's due another technical rally, but would it be a selling opportunity? The market is now forming lower highs and lower lows. Thank you for watching this video today. I hope you found it interesting and informative for your trading. Don't forget, you've got that non-farm payrolls report this afternoon where the market is looking for 182,000 jobs, up from 49,000 last month. So with that, I'll leave you with the INFINOX support and resistance table, and I'll speak to you again on Monday where we'll be looking at more major market moves. Thank you very much, everyone. Speak to you soon.